everyone, welcome to another dividend stock investing video. Today's video is really special because it represents the combined knowledge of 12 different dividend stock investors. That's right, I recently organized a meetup in Burbank, California. This is a suburb of Los Angeles. Burbank is where a lot of the entertainment industry happens to be, and 12 of us got together, including myself, to discuss dividend stock investing. So I want to recap the entire meetup today. I want to go through all of the lessons that I personally took home from the meetup, and there are many. But first, I want to take the opportunity to thank everyone who joined. I had members of the community, the dividend investing community, who drove all the way from San Diego to be there. I had members of the dividend investing community who drove all the way from the Central Valley to be there. This was one of the best turnouts ever. We did everything outdoors in a socially distanced manner, and so it was a really good time, and I am so excited to go through all of the lessons from the meetup in the video today. So get ready, everyone. This is a really special video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I want to jump right into some of the big takeaways from the meetup. First and foremost, one of my favorite takeaways was one of the attendees bought a house. He was able to purchase property many years before he was otherwise planning on doing so. And so this investor, because of the dividend stock investing strategy, was able to build up a down payment, was able to build up the financial resources to be able to purchase a home many years before he was otherwise envisioning doing so. And so that is the power of dividend stock investing. And it was so much fun because that same investor and a few other investors also at the meetup were discussing how they are planning on helping others in their family, helping others who are friends of theirs get started with dividend stock investing and start building portfolios. And that's something I think about all the time because I am really trying to get my kids involved in dividend stock investing. And so I love how this community just keeps growing, and the benefits, the lessons, the value from dividend investing, it just keeps reaching more people. I want to get into the first segment of the video today, which is literally a massive takeaway that I had from this meetup. It is kind of a blockbuster takeaway. It was like kind of, hey, my mind is blown right now. And so the best way to illustrate this is through pictures. So check it out on the screen right now. And so many of you know Kimberly-Clark is one of my core stocks. It's a ride or die stock. It is a stock that I love, and I own it, and it's a large position in my portfolio. But what you see on the screen in front of you right now is Kimberly-Clark de Mexico, or Mexico. This is the Mexican subsidiary of Kimberly-Clark. And so some of the investors at the meetup brought this concept forth that, hey, Ian, you love investing in Kimberly-Clark. It's one of your favorite stocks. But did you know there's a separate company called Kimberly-Clark de Mexico, which trades under ticker KCDMY. It actually trades under a separate ticker, and it trades on the stock market as a separate company, although it's affiliated with Kimberly-Clark. My understanding is Kimberly-Clark owns 48% of KCDMY, but it does not own all of it. And you will see on the KCDMY website that there's a ton of overlap on the branding, on the brands, on the strategy. Obviously, it's a paper-focused company, and Kimberly-Clark de Mexico is one of the larger employers in Mexico. It's a really big, solid, stable company in Mexico. And so this kind of blew my mind because I just thought, hey, I invest in Kimberly-Clark. That's that. I didn't realize they had this separate subsidiary in Mexico that trades as a separate company. And the parent company owns 48% of it, but not all of it. And the same investor brought this concept to the meetup that, hey, Ian, it's not only about Kimberly-Clark. If you look closely, there are other companies that do this. And it's kind of like this whole notion of Coca-Cola and Coca-Cola Bottling Company. Obviously, that's not a perfect analogy, but there are these instances with these large publicly traded companies like Kimberly-Clark or Coca-Cola that have either subsidiaries or very closely related companies that trade separately that investors ought to look into. And so what I want to show on the screen right now, check it out in front of you, is just a few stats that I pulled from the Kimberly-Clark Mexico website. And one of the things I noticed is just when you look at their performance over time in terms of sales, it's doing really well. They have a compound annual growth rate of 5.95% top line growth, sales growth from 2010 through 2020. And so that's really exciting to see. And it also says that they've distributed most of their earnings through dividends over more than 50 years. Wow. And so there's quite the track record with this company. And just that statement alone shows that this is a shareholder focused company. This is a company that cares about the shareholders. And so I really liked that, and it got me thinking at the meetup, hey, Ian, should I look at these subsidiaries? Should I just stay focused on Kimberly-Clark, or should I look at the subsidiaries? And so what I did is I did a quick analysis of Kimberly-Clark versus Kimberly-Clark Mexico, just to give everyone at home a picture of what these two companies look like. So check it out on the screen right now. What you see in front of you on the left is Kimberly-Clark, on the right is Kimberly-Clark Mexico, and what you can see is their price per share there, earnings estimates, and so on and so forth. And I'm just going to start with Kimberly-Clark. It's trading at $136.62. Based on their forward EPS guidance this year and next, it's trading at a PE this year forward of 20.27, next of 18. It's certainly not at a bargain price at all. This is a company where margins have been squeezed just a little bit as of late because we're exiting the pandemic, and the cost of inputs to produce their paper products, they're going up. We're facing some inflation on input costs, and they haven't really passed that along to the consumer yet. So margins are getting squeezed a little bit at these CPG companies. What I would say about Kimberly-Clark that I love so much is that starting dividend is a solid 3.3%. That's why I highlight it. Payout ratio is not too bad at 67.7%. It's a little bit on the higher range, but manageable. They have room to increase that dividend. And over the last 5 years, they've increased the dividend on average by 4.4% per year. Market cap is $46 billion. Stock chart on the bottom, I just show kind of all time that I was able to pull from Yahoo Finance, and it's up and to the right quite a bit. Love this. It's a classical example of dividend growth investing and just kind of total returns investing with a company like Kimberly-Clark. You get the best of both worlds. You get the dividend, the growing dividend, and the growing share price. Now, on the right-hand side, you can see Kimberly-Clark Mexico, KCDMY, and it's trading at $8.46. I was not able to pull forward analyst guidance on this, so I just have a trailing 12 months EPS and PE on a trailing basis. The PE is an 18. Seems to be trading in a somewhat similar PE range as the main Kimberly-Clark. And you can see that the dividend is actually coming out about 42 cents per year. And so per quarter, it's roughly 10.4 cents. And so the starting dividend yield is 4.9%. I highlight that because that's a pretty high starting dividend yield, as was stated on the slide that I shared with all of you just a minute ago. They like to pay out most of their earnings as dividends. And so the dividend yield is a stellar 4.9% starting yield. This could be a really good option for someone who is close to retirement or needs cash flow immediately, but still wants to go with a brand name company like Kimberly-Clark, a consumer packaged goods company. Payout ratio is 88.5%. So obviously there's not a lot of room to increase the dividend. And quite frankly, I wasn't able to pull the comparable quarter 2016 dividend, but I went back as far as I could. And it looks over the last 5 years, more or less, the dividend's been flat. It's not really growing. Market cap is $5 billion. And so it's a smaller company. Now, and you can also see on the stock chart, it's up and to the right, but it's more flat. It looks more of a flat return over time. And what I would say with Kimberly-Clark Mexico, it's one of those stocks I would say that is interesting for a few reasons. One, as I mentioned, if you're close to financial freedom and you just need cash flow, this might be a good alternative to a electric regulated utility, for example. I think that's one interesting thing about this company. I think another thing that's interesting about this company is it's just another way to invest in consumer packaged goods without going with the main Kimberly-Clark. And the reason that it's interesting is they're in Mexico. Mexico is a country, South America in general, all of the countries there are growing a little bit quicker. Mexico is one that comes up all the time. These are the countries that are going to have a lot of population growth, a lot of innovation, have a younger population. And so if you wanted to play that kind of trend, this could be an interesting stock. Let's keep going. Check it out on the screen right now. I also have some footnotes there. And what I want to share in the footnotes is there is a 10% foreign tax withholding for U.S. taxpayers. But if you're a U.S. taxpayer, you can generally, obviously seek your tax professional's guidance, but you can generally claim any foreign tax withholding back as a credit on your tax return. Now, if the amount of credits you're claiming get above a certain level, you have to also file Form 1116. And so those are some technicalities. And so Kimberly-Clark Mexico, it could throw a curveball, if you will, in your tax prep. But I'm already doing this with some other holdings, so it wouldn't for me. So for me, am I going to go out and buy Kimberly-Clark Mexico? Probably not. Am I going to keep a close pulse on it? Yes. And was my mind blown by this knowledge from the meetup? Absolutely. Let me know in the comments below what you think about this strategy. Also, don't forget to go ahead and smash that like button. It really means the world to me. Really helps spread the knowledge of these videos. Please also go ahead and subscribe. It is the best way you can thank me for producing this content on YouTube. And so I want to keep going in the video today. I had another big insight from this meetup, and one of these big insights was, hey, Ian, you like to invest in some financial assets or financial related companies. You're in companies like Chubb, for example. You've got Bank of Hawaii. And Ian, we know you also have Bitcoin. So you're kind of in that DeFi space and in that blockchain innovation space. But Ian, did you know there are companies in the finance space right now that are trading dirt cheap? And one of them is Goldman Sachs, the investment bank. And also, Ian, you ought to take a look at Visa because they're just really expensive, but they're growing like crazy. And so I wanted to share these two companies today because these are kind of off the beaten path, especially Goldman Sachs. No one is talking about that in the dividend community. And that's what I love about these meetups, because investors bring the best knowledge to them, and it's such a good time. So anyway, check it out on the screen right now. And so as you can see on the screen, Goldman Sachs is on the left, Visa is on the right. And I wanted to share with Goldman Sachs that it's trading at $398.80. You can see on the stock chart, it's really surged as of late, probably just because of all the mergers and acquisitions and SPACs and IPOs, all the crazy stuff happening in that market. By the way, my mind was blown the other day on another topic. Dutch Bros, the coffee house. I love Dutch Bros, and they're going to IPO, it seems, sometime soon, any month now. And so I sent a shout out to my friend, the IPO Nerd. If you're not following him, make sure to. I will link in the pinned comment below. He's a YouTuber as well. He follows all of the IPO companies. And so I thought I'd ask him about this, and he already did a video on it. And once Dutch Bros releases their S1, he's going to do another in-depth analysis of the S1. But I can't wait to look at the S1 of Dutch Bros. But what got me thinking about Dutch Bros was Goldman Sachs. When Dutch Bros goes public, I wouldn't be surprised if Goldman Sachs is kind of part of that team that gets them to go public. And so anyway, Goldman Sachs, check it out on the screen right now. They're doing a lot lately in terms of stock price, but also in terms of earnings. Their earnings this year forward are estimated to be $52.86. The earnings next year in 2022 are estimated to be $37.55 based on analyst consensus estimates. That places a forward PE of 7.5 this year, 10.6 next year. These are dirt cheap PEs. And so it's so exciting to see something like this. I don't follow Goldman Sachs. And so that's why I do these meetups. I get to follow stocks I usually don't follow. Now, what's so interesting is their starting yield, it's really low. It's only 2%, but also the payout ratio is low at only 15%. So there's a lot of room to increase the dividend. And they're doing just that. Check it out. The 5-year dividend growth rate on this company, compound annual growth rate, is a staggering 25.2% on average per year. So this could be a great company for a dividend stock portfolio if they can keep it up. Now, what I would say on the kind of the cons list is this is not a company that is just straight up and to the right. They go through cycles, and we're in an up cycle now. There's a lot of M&A, as I mentioned, mergers and acquisitions, IPOs, all that kind of stuff. And crypto's hot now, and I know they're doing a lot of trading in crypto. And so that's just something to keep in mind as well. But I like what I see. Am I going to buy Goldman Sachs? Probably not. I'm kind of reluctant these days to add more positions. I have so many, but you never know. I'll follow it. Now, Visa is another one. I think Visa is a great way to play FinTech. It's a great way to play blockchain and crypto if you don't want to just kind of go directly into it, because they're on the forefront of financial innovation, and they're trading at a $231 share price. Based on the forward EPS estimates, their PE is really high. It's a 39 this year, 31 next year. The dividend is a really small 0.6%. But the payout ratio is low at only 22%. That's why I highlight it. And their 5-year dividend growth rate, compound annual growth rate average per year is 18%. Market cap $500 billion. Stock chart up and to the right. And so basically, Visa, in my opinion, it's one of those interesting stocks that it's always kind of expensive, but it's because they're growing so quickly. And there's a lot of innovation that will be happening in finance over time. And with that innovation, it seems like Visa has placed themselves in the perfect sweet spot to benefit from that. So put in the comments below, by the way, if you own Visa, what do you think about it? Put also in the comments below, hey, what do you think about Goldman Sachs? Another very interesting one from the meetup. Anyway, I want to keep going. So check it out on the screen right now. The next topic that we discussed was Chinese companies. We discussed Alibaba, BABA, and also JD.com as well. And so these are two companies I don't know too much about. This is not my wheelhouse. I'm not an investor in these companies just because I don't know too much about them. But what the investors brought to the meetup is, hey, Ian, you ought to look at these because they're really cheap. There's a lot of talk about increased government regulation in China right now. And with all of the increased government regulation, Chinese stocks are under pressure and they're not doing so well. And so anyway, Alibaba right now is trading at $172.35. And by the way, these are not dividend stocks. And so it's a dividend investing meetup, but we talk about all kinds of stocks. And one of the things I noticed at the meetup is most people, or not most, but a lot of the people at least, were focused not only on dividends, but total returns. And that is all good. And so the purpose of the meetups is to discuss all different types of financial strategies, not just dividends. And that's why I'm covering this today. Anyway, check it out on the screen right now. And so what you see here with these two stocks, with Alibaba and JD, is the forward PEs are ridiculous. With Alibaba, it's at a 2.74 this year, 2.36 next year. And so it's just insane how cheaply it is trading. And JD, same thing, forward PEs of 7 and 4. And these are big, successful companies. And so I would have to dig a lot into these. The key things I would say that is invest in what you know. I want to point this out because I have a lot of friends. I live in the greater San Francisco Bay Area, and there is a large amount of people here from China that know a lot about China. And I talk to them sometimes and I hear, wow, the innovation in China is unreal. And I also hear things like, living in China, you can make even more money in certain jobs than you could make here in the San Francisco Bay Area. And so what I'm trying to say is there are people right here that know a heck of a lot more about China than I do. And so they're able to invest in these types of companies because they have more knowledge. For me, I'm saying I'm a CPG investor through and through. I know a lot about your basic and advanced dividend stocks. I don't know too much about Alibaba and JD, but it is interesting to go to these meetups to learn about a different class of stocks that is trading at very, very low PE ratios. And so put in the comments below if you're really familiar with China, with government regulation, what's going on there right now. please spread the knowledge to the community in the comments below. It would really benefit me as well. I'd like to understand, why are people so worried about the regulation? It seems, is it going to be so bad that a stock should be trading at a PE of 2? Am I looking at this right? I was pulling the analyst estimates from Yahoo just like I do for everything else, and I look at this PE of 2, it almost seems wrong. Am I making a mistake in how I'm looking at this? It just seems inaccurate almost. It's unbelievable. And so put in the comments below what you think about that. I'd love to hear. And what I would also say on this topic is there's word out there that Charlie Munger, I know he's a big buyer right now, I believe, in Alibaba. And I would just say, tread with caution, do your research before you just follow Charlie Munger into an investment. Just because he's a world famous investor, business partner of Warren Buffett, make sure you do your own research. That's one of my takeaways. But I know people at the meetup who have done their research, who are more familiar with these types of companies than I am. They are buying them right now and they really like them because of these low PEs and perceived ability to grow. And as I mentioned in the video earlier, China is one of those countries that's growing really quickly in terms of population, in terms of innovation as well. And so it's probably not a bad place to invest from a macro level, just looking over the course of the next few decades. And so after we discussed that, we got into a good old classic, Johnson & Johnson. So check it out on the screen right now. Many of you know Johnson & Johnson is my #1 favorite dividend stock of all time. And what was so fun is some of the attendees at the meetup actually are traveling nurses. And they were mentioning that as part of their work, every single day at the hospital, they see Johnson & Johnson products. And that's what's so fun about dividend stock investing. And in these kind of companies that I own, it's just so tangible. I totally understand J&J. It's my #1 position because I understand the company. I'm able to analyze the company. I love the company. It's trading right now at a price per share of $177.19. It has gone up and to the right as the stock chart shows, but it's still not at a horrible PE. This year's an 18, next year's 16.97, so call it a 17. Not too bad in the scheme of the overall market. I would probably be fine buying shares here. I sure love this company. Anyway, the starting yield is 2.4%, but the payout ratio is low at 43%. There's a lot of room to grow that dividend, and they have been doing that over the last 5 years on average, 5.8% per year. Market cap is $466 billion, in a similar range to Alibaba. Alibaba is a similar size in terms of market cap. It's my #1 favorite dividend stock of all time by far, and my largest position as well. And so after we talked about Johnson & Johnson a bit and how the products are so familiar, we got into a thought exercise because we'd already been talking about Kimberly-Clark. And one of the members of the community was wondering, Ian, if you had to just buy one of them, Kimberly-Clark or Procter Gamble or Clorox, which one would you pick and why? And so I want to show it, check it out on the screen right now. I want to show all three as a comparison. You can see all three of them right there. They're all three are world-class companies that have provided great total returns over time, great dividend growth over time, great cash flow over time. They really have the whole package, if you will. And so I would say out of all of these, they're not cheap right now. I think out of all of these, we're facing some difficulty because there was a lot of hoarding during the pandemic and coming out of the pandemic. A lot of people already have enough stock of Clorox wipes, for example. A lot of people have enough toilet paper, for example. And so they've got that, but they also are facing higher input costs because of inflation. And so we'll see over time how they do, but I am a CPG investor, and I believe over time, global consumers around the world will continue to use and need the products that these companies provide, which are so great. And so I start thinking if I had to only buy one of them, a long time ago, I would have said Clorox. And the reason I would have said Clorox is it's a smaller company, more room to grow. And it's basically just got more growth in it. But the newer Ian would basically say Procter & Gamble. And the reason I would say Procter & Gamble is it has the largest market cap, and we live in a winner-takes-all society. I think in the kind of world we're in, especially with higher input costs, when you're operating at scale, this is a company that's probably going to do better because they're at such a big scale. And so I love Procter & Gamble for that. These are all world-class companies. I own all three, but I would probably pick Procter & Gamble if I could only pick one of them right now. The reason I would probably not pick Kimberly-Clark is because they're a paper company. I would say what they do is more of a commodity. Now, obviously, their brands, they're world class. They have the Kleenex brand. They have the Scott brand. they have many different brands that are recognized by consumers. But at the end of the day, is the brand enough to distinguish them when a consumer's just trying to get some toilet paper? And so what I would say is Procter & Gamble, they have a broader portfolio of products, and they have certain products like the Swiffer Sweeper, for example, that are not just a commodity, but it's an innovation as well. And so for that reason, I would say I like Procter & Gamble better than Kimberly-Clark, and a little bit better than Clorox as well. But I own all three in my portfolio. I love all of them. They are all world-class companies. And so with all of that, I want to close out today by giving just a few very quick shout outs. I just wanted to say, Richard, my friend Richard, who attended the meetup, he's been here on my YouTube channel since the very early days. He's a friend of mine. I'm so blessed to have him in the community, and it's always so good to see you, my friend. And so I'm so thankful we were able to connect again. I also wanted to say shout out to Alex. Alex is a friend of mine now that I've met through this community. He came to the meetup, and he has his own YouTube channel. And so in addition to the IPO Nerd, I'm going to link in the pinned comment below to Alex's YouTube channel. And so make sure to check it out. Alex is saying on his YouTube channel, he mainly goes through tech stocks, but he also loves dividend investing as well. And so I also wanted to say, shout out to my friend Nandit. He showed up at the meetup too, and we've been communicating a bit behind the scenes here thanks to this community as well. And so there were 12 of us, including myself, so I don't want to go through everyone's name, but I gotta say, after the meetup, it has been so wonderful to stay in touch with a lot of you through Instagram, through Twitter, and so everyone, if you want to connect with me, make sure to check out the pinned comment below. I'll link to my Instagram, link to my Twitter. I love you all. I'm so blessed to be in this community, to be part of this, to be spreading the knowledge, to be talking about dividend stocks. Thank you everyone for attending. And so before we go today, please go ahead and smash the like button if you enjoyed the video today. Please go ahead and subscribe as well. It really, really means the world to me. It helps my channel grow. I want to reach 100,000, and I'm going to be publishing the best possible content to reach that milestone. And so before I leave today, in terms of a full disclosure, I own the stocks mentioned today, or at least a lot of the stocks mentioned today. I am long, let me see, Clorox, ticker CLX, Procter & Gamble, ticker PG. I am long Kimberly-Clark, ticker KMB. I am also long Bank of Hawaii, BOH. I am long Chubb, ticker CB. I am long Kimberly-Clark, KMB. I think I already mentioned that one. I am also long Johnson & Johnson, ticker J&J. Last, I am long Coca-Cola, ticker KO. I own all of those stocks in my personal dividend stock portfolio. Also, before I go today, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a ton of money in the stock market. Also, today's video is not tax advice. Please go ahead and consult your licensed tax advisor before making any tax-related decisions. All right, everyone, I'm going to see you in the comments below. Thank you for watching the video today. I love you all. I hope you have a wonderful day.